Hello everyone, welcome back to Smart Investing with Philippe. Today's focus is the Federal Reserve May 2025 meeting and what it means for the market, your portfolio, and what next. So, as expected, the Fed's held interest rate steady at 4.25 to 4.50%. This marked the fifth consecutive meeting with no change. Powell opened the meeting by acknowledging that while inflation has cooled somewhat, it remains too high for comfort, especially given persistent strengths in some services category. At the same time, recent data showed jobs growth slowing and GDP shrinking slightly in Q1, which Jerome Powell admitted raised dual risk concern: inflation on one side and weakening growth on the other. The key message from Powell today was actually very blurred and not very helpful. We are not in a hurry to cut rate, but we are also not trying to rush and to crush the economy. He insisted the Fed will remain data dependent and won't act prematurely. Some analysts were expecting a hint at rate cut for the second half of the year. That didn't happen. Instead, Powell struck a deliberate tone, recognizing the complex environment: trade disruption, tariff-related cost increase, mixed signals from consumers and labor market. So basically, we can say that the Fed meeting was not very helpful today. I mean, it was actually less dramatic than the last one. If you remember, I was actually criticizing Jerome Powell's stance on the stagflation word. He didn't reiterate that mistake. And actually, we don't know exactly what they're doing or what they're not doing. I think they will be too late as usual. I think probably Donald Trump nicknamed the too late Jerome Powell is probably warranted, because we can see already some sign of growth contraction, GDP growth contraction. There is no sign of more inflation. And I think it should already start to cut rate, at least to help the market or to help the loan market and the small caps company with the leverage. He should do that at least by decreasing 25 basis points. It would send a strong signal to the market. I don't think 25 basis points will make a huge difference into the inflation story. During the Q&A session, Powell was pressed by three main topics. Recession risk. Powell: we don't forecast a recession, but risks are clearly tilted. He pointed to the 0.3% GDP contraction in Q1, but framed it as partly due to inventory effect and tariff-related imports. The second topic was rate cut. He pushed back firmly: we need to see more convincing evidence that inflation is sustainably moving toward 2%. No timing was given, which disappointed the market looking for forward guidance. They didn't give any guidance at all. Political pressure. Powell dodged question about Trump's recent comments and keep it strictly institutional. Our job is to deliver policy, price stability, employment. That's our dual mandate. Basically, market reaction were muted but cautious. S&P 500 closed up slightly, about 0.2%. Nasdaq dip on tech weaknesses, minus 0.3%, and VIX flat around 29. Bonds yield ticked lower, signaling no immediate fear of hike, but no cut either. Analysts describe the meeting as a pause with a purpose. The Fed wants more data before blinking. What these people can come up with narrative, I don't understand why they come up with this pause with a purpose. What does that mean, a pause with a purpose? Anyway, what's come next? All eyes now turns to the May inflation data, CPI and PCE, next job reports, and where the trade tension escalator is. If growth continues to slow and inflation continues to ease, we could see a rate cut by Q3, Q4, but that's a big if. Okay, let me know in your comment, do you think the Fed should hold cut or has already waited too long? Sorry, if you found this helpful, drop a like, make sure to subscribe for daily market update. See you tomorrow for earnings and price action analysis. Thanks so much and see you next one.